Good morning, everyone. It's good to have Cindy, Gordon, Karena, and Sandy with us this morning. And I think we have some very upbeat sharing this morning about the ecosystem in Hong Kong, the venture performance in Hong Kong and in the region. And first of all, I have to say sorry. I have to take off a bit early. I can only share 5 minutes here. That's the risk of getting a electrical member on Wednesday and Thursday panel. We cannot control our schedule. So I'm actually lining up for a discussion at electrical about e-government legislation. So I have to run. I just want to share a bit about, I'm very upbeat with the sharing in the mornings about the current trends in Hong Kong. I agree very much with the few keynote speakers. Just one thing we have to add, that the reason we have to be upbeat is I think with the latest policy address, it actually had taken a lot of the suggestions from the industries, and we can see that we have some very long-term targets set and KPIs, which, you know, I think most government will be very reluctant to put on the paper. But I think that is a good support for what we're going to do in Hong Kong in terms of tech developments in Hong Kong. We laid out the funds. You might know about the 30 billion Hong Kong Investment Corp, Hong Kong IC. That has just been put into paper that will be running soon, next year. And 10 billion One Plus, which is like a commercialization platform for university research to bridge the gap between research to commercializations. So these are things that we actually have been pushing or urging the government to come out with, and we're happy to see that is in the policy address this year, and also the talent scheme and all the supports. So we definitely, I think, work hard. I think in LegCo, I can only share that a lot of our topics, legislations, discussions, were around technology, and I think all the members there were eager to, you know, help Hong Kong shape it as the technology hub in the region, and the International Tech Center as laid out in the 14 5-year plan. So working hard on that, I guess we are all the way for an upward trend that we're going to build Hong Kong as a hub in the region. I think we have a big discussion about Singapore. I think I have the Singapore phobia at the peak when they had the Formula One, that everyone told me about things that happened in Singapore I haven't heard in my lifetime. I think that is a good competition that we have. I think rivalry will only bring the, advancement. So a lot of the policy from each city, Hong Kong and Singapore, I think we are actually actively looking into and comparing nooks. So what we can improve next. So I think we have to embrace the competition between the two cities. It's actually, it will only bring advancement, and I think we all well know of what's happening in the south. I think that we have this table and chart just now in the sharing that we label the Hong Kong and Singapore head-to-head all the time. I think it's a good note that we need a good places like Singapore, so that we can work together and grow together. So I'll lead from here, and I want to trouble Cindy take over as moderator and speaker for the two roles. And sorry about that. I have to take off soon. See you around. Thank you.
Thanks, Duncan. Actually, it's my pleasure to take over the role as the moderator with such a great panel here. So, okay, first, because I have been tasked to do the moderator just 5 minutes ago, so I have to look at the questions. So I heard from, you know, the presentation by Irene this morning about the outlook for the rest of the year and also for next year. Despite some, you know, some positive signs, it is still very challenging for the VC space going forward in the next 12 to 18 months. So what do you think startups in Hong Kong should do in order to really, you know, brace through this very challenging environment? Anyone? Start from you, Gordon.
Okay, I'll start. Now, obviously, I think that the trend is similar all around the world. Investors these days are a lot more focused on fundamentals. In the past few years, before I think 2021, we've seen a lot of ventures burn money to acquire users, heavily subsidized scheme, that sort of a business model is no longer valid and attractive to investors these days. So even though a lot of startups obviously cannot be profitable, from the get-go, and maybe it'll take a few years for them to get there, but I think investors are increasingly looking for a clear path, clear plan, and you have to be able to demonstrate at least that the unit economics does work in the long run, right? And especially for Hong Kong, I think obviously it's different for different segment, but the local market itself usually isn't big enough, right? Yes, I mean, if you do fintech and maybe enterprise solutions, there's an enough market scale to nurture a profitable company. The question is whether that level of profitability will be sufficient to present an attractive exit for investors, right? That's a different question. So I'd certainly encourage startups to first really sharpen your pencil and work on your unit economics and revenue model and passive profitability. And secondly, really develop a plan for building your business outside of Hong Kong, whether it's the GBA or ASEAN or both. I think that would be my advice. Right?
Yeah, thank you. I actually do have to make a quick plug on what Duncan said about that healthy competition between Singapore and Hong Kong, and I'll get to you in a second, which is actually I think I would all just like to invite us to change a little bit our mindset and our confidence. So obviously for startups, it's not either or between Hong Kong or Singapore. They want to raise to regional and global fame, so it will be both for sure. But just looking back, we may have been later to the game, but since 2015, the first time the word startup made it into the budget declaration of Paul Chan, we have given birth to nearly 20 unicorns in Hong Kong. And I think in Singapore, we're even not in the double digits yet. So again, just a little plug for Hong Kong. So we're in the right space. Now, the thing is with venture capital, I do agree, obviously, in times when money gets more expensive with rising interest rates and a lot of uncertainties that are happening around the world, investors obviously understand that they're probably sitting in a seat where they have a little bit more bargaining power. Now, once again, I think what is always, and I'm just going to build on what you say, is really interesting for venture capitalists as we are with AngelHub. On the one hand side, yes, we do invite people to invest through our platform alongside us, but we also have our fund. So we do assess, companies and then put our own money. And I build on what Duncan was saying. So obviously in these times, it's relatively easier to be a venture capitalist because you will not only see how startup founders are agile and able to adjust their value proposition, giving on, the very, very quickly evolving market demand, but you can also assess teams in terms of their bottom line stewardship. So again, in these days, in other words, I mean, to directly answer your question is, I think the best tip that you can give to startup founders is obviously, cash is king. So make sure, you're sitting on enough runway. Make sure you don't wait as long as possible to raise again. And there could be a huge temptation because, again, valuations right now are not through the roof. But that is one thing. And with that, you can never be too conservative in terms of a top-line forecast, right? And you can never be too aggressive in terms of cutting costs. So I think these are really the two advices to founders in these interesting times.
Yeah, definitely. How about Sandy?
Yeah, let me put in a different spin to the perspective, right, that I think the experts have spoken about. So basically, I look at ecosystems. So what we do is work with corporates, work with startups to see what we can actually offer financing solutions or some solutions in the Hong Kong market. So from the startup's perspective, it's all not that bad yet, simply because I see a lot of opportunities and interesting ones where a lot of corporates in Hong Kong, a lot of banks in Hong Kong are actually willing to say, okay, we have an innovation fund or we want to do something to work with startups. So for example, even for myself, right, I'm very willing to, I'm out there, looking to see how I can partner with startups to actually see whether we can co-create solutions, right, for the Hong Kong market, for SMEs or consumers in the Hong Kong market. So this is where I think this is also a good opportunity for the startups to strengthen themselves. So I agree totally, right? Economics is key, making sure your cash flow, is there is key. But another way to look at it is how do we strengthen the business? And, maybe it's not just on your own, but maybe partnering with a corporate or a bank could help you strengthen your business and your proposition.
Yeah. That's very true, because sometimes it's not only capital, but also how you can grow your business. And partnering with corporates or banks will be really help for startups to scale and be able to attract investors. And for us, Alibaba Entrepreneurs Fund, of course, we have a big portfolio of over 60 companies. And what we have trying to tell our startup founders is really to manage your existing shareholders as well, because there may be possibility of a down round financing. So how you and these existing shareholders have been, supporting you for a long time. So you have to really engage them earlier and manage their expectation so that they can support you in case of, like a down round financing or to do some cost cutting, etc. Okay. Okay, move on to the second question. So we say that, of course, this is difficult, but you also see that, especially Karena, you see there's good opportunity for investment. So what type of, what sectors will you be more interested in, or what are the trends that you see going into 2023?
Yes, so actually on AngelHub and again with the fund that deploys capital alongside the platform, we do focus on mainly three key areas. One, our investments into Web3, and we can look a little bit longer into what type of businesses we're looking into when we invest into Web3 companies. The other one is constantly fintech. And interesting, when we talk about, a disruption in financial services, also the lines between Web3 and fintech are a little bit blurring. And then the third thing is really, we truly believe that there is also still huge opportunity in the tech-empowered ESG space. And when we look into ESG, I think also by now, of course, we're aware that the E stands for environment, but also in the S and G components. So for us, when we look into ESG, we relatively define that in a broad scale. So we can also look into investing into tech companies, so education, I think, which will always be a fundamental growth opportunity with a huge need also for innovation, but also into things as food tech, etc. So we spend that and define that relatively largely. So again, to your point, I think, yes, in general, venture capitalist deployment maybe started slowing down a bit, but also, again, in terms of geographically and then by industry, we can see huge differences. So particularly, obviously, in the Web3 space, where we're arguably just at the beginning, right? I mean, what we're talking, in terms of potential, 100, 200 million wallet users versus, the 5 billion internet users. So again, I think there is still a long way to go. You can see huge other big investors being very bullish on the scene right now, being able still to invest into companies that have very sound value proposition, economics, all of that, because they're building the future. So that's definitely something I invite us all to have a very, very deeper look.
How about Gordon? Do you have different views?
Well, on top of that, I think Hong Kong also has very good opportunity for developing services, enterprise solutions for SMEs. And that, I think, will also, because Hong Kong has obviously a very high percentage of companies as SMEs. And we've also very known for our quality of operations and the high sort of governance standard. And if a startup is able to sort of use Hong Kong as a springboard, right, to conduct your proof of concept, to build your first market, then I think it is a very good starting point to bring that to mainland China or ASEAN countries. Secondly, I think I was very happy to hear from Duncan that the government is allocating more resources and funding to helping university research, commercialization of university research. We have a very strong research base, which has always been around, but I don't think there has been enough patient capital to help commercialize these research results. So hopefully, with the market being the way it is, investors can then focus a bit more on long-term, patient investments in looking at sifting through the large amount of university research. And I think there are always hidden gems, right, in this area. Yeah.
Yeah, and also, funding and also the support to help them to commercialize is very important as well. How about Sandy? You mentioned that your approach to startup will be quite different from a pure investment. Will there be any sector that you will be most interested in, or your client, you see from a client's point of view, they are more interested in?
Yeah, so maybe a few angles. What we hear a lot from, say, SMEs or even corporates is really around how do we digitally transform ourselves. So actually, there are many angles to do that. For example, like what Gordon was saying for SMEs. Could startups think of certain solutions for them to help them with their digital transformation so that maybe they could be operating more efficiently? Or even for corporates, how do we actually digitize maybe some of the procurement processes or the supplier processes? I think there is a lot of things to be done from there. Whereas from a bank perspective, I think there are a lot of regulations out there, and there are a lot of technologies needed. And this is where I think startups can help, really, in terms of maybe you're knowing your customers, or how do you even build identity that is trusted, that can be trusted by, say, banks and corporates and VCs all at the same time. So I think there are many new areas that we can venture into. It's just about, where do we see the opportunities and how do we actually grow on that. And one more point that Karena said around ESG. So I realized, right, a lot of us focus a lot on the E component, but truly we really shouldn't neglect the S and the G, because in the S, it also talks about how do you serve the underserved markets, includes startups, includes even, SMEs. So what can we do around some of these areas as well? That I think could be potentially interesting areas of development for startups.
Yeah, I agree as well. And actually, we are very, very fortunate that AEF has one of the startup, Fennel AI, that provide red tech solution, which is adopted by Hong Kong MA. I think this is a really great example of how startups can really help with the G side, right, the ESG side. And I hope that this technology can be exported to other markets, maybe to Singapore, right, one day. Okay, so talking about regulation, maybe we can move on to talk a little bit more about the regulatory landscape in Hong Kong, or how, or I should put it this way, how the government's policies can further help the development of the startup scene here in Hong Kong. So how do you see, from maybe start with Gordon, how do you see the existing, the Type 9 licensing condition, as well as perhaps the green channel, the fast-track green channel to the GBA area? How do you see these policies, or how you want to see changes in order to further facilitate investments in the Greater Bay region?
Okay, yep. So when it comes to regulatory environment and facilitating the development of the venture capital industry, I think Hong Kong still has room to improve, right? As a lot of you may know, the SFC has issued a circular, I think it was over a year ago, clarifying that even venture capital firms managing funds out of Hong Kong are required to have a Type 9 license, right? And right now, this Type 9 license is exactly the same as what you require for a hedge fund, right? And so, as such, a lot of governments or the governance and requirements under the license is basically the same, right? Whether you're a private equity fund, venture capital fund, or a hedge fund. And we all know, typically, venture capital funds are, the team's a lot smaller. The type of investments involved is very different, and so I think the existing framework is not a very good fit, right, for governing this specific industry. And also, it for some firms, I think it's a very complicated process and task just to get licensed and to maintain the ongoing requirements of the license itself. But if you look at the case of Singapore or even the US, there's a lot simpler registration process for becoming a registered or licensed venture capital firm. So I do hope that there will be simplification in this regard, and which will then allow a lot more venture capital firms to set up in Hong Kong. And the other thing is that, I mean, obviously there are more venture capital firms in Hong Kong than those that are licensed. So what do they do? There are very complicated and cumbersome ways to sort of work around, right? And that is obviously not an ideal situation. It's not efficient. It's not cost effective. It's not efficient. And it doesn't help the growth of the industry itself, right? So I think that I hope can change.
What do you think, Karena?
Yeah,
I think you got that license, right?
Yes.
Yeah, one of the first.
Absolutely, yes. So AngelHub itself is the very first startup investment platform licensed by the SFC, and I think so far we are actually the only ones holding a license. I think originally the question was pretty broad in terms of what can the government do to support the tech and innovation scene. But let me just specifically reply on regulatory frameworks, which is one, right? Definitely. Not the only one where the government can intervene, but one. And I think that's typically the point where it's very easy to talk badly about regulations and being a showstopper. And of course, regulators can never go first. But I would actually invite us to look at regulations really also as a very sound infrastructure that needs to be put in place. I fully agree with you, to avoid actually then people bypassing or working without control, which is not going to help in the long run. Obviously, I'm saying that now being licensed, but the thing is, though, that I definitely would like us to invite is, yes, regulator cannot go first, but they can go at different speeds, right? And I think that is something that I feel we're ready to put the foot back on, the gas pedal. I compare it to 2019, which was a brilliant year for fintech in Hong Kong, where the HKMA, the SFC, and the insurance authorities really made leapfrogs forward by looking for the dialogue with people that are in the space. So I agree with you that if we, under the current framework, look into understanding, what is actually possible, what actually helps when it comes to, you talked about, digital assets regulations, that really, without compromising on investor protection, but really actually reflects the underlying vision, mission, and also value proposition of the scene. So again, if you think about limiting access to digital assets only to professional investors, it's obviously going to be a showstopper for the entire industry. So I think just a huge invitation again to the regulators to come and talk to us in the space and try to understand how we can go faster together.
Sandy, do you have anything to add?
I don't have anything specific to the regulatory framework, but maybe just let me share some of my perspectives. So what I see in the market is that, and as in for any other, even in the banking world, right? Late stage startups tend to have more access to funds, as we all know. And it's really the early stage startups who are really, who do need funds and do need, more help than ever to actually help them succeed. So if there is anything that the government could do to actually provide like more initiatives to support all these early stage startups, that would be great. Because I do see quite some initiatives coming out, and some of them are really a lot targeted at the later stage startups. So anything that can be done to support the early stage startups, that would be good.
Yeah, talking about funding and also support to startups, the government has announced, and also Duncan just mentioned about the extra funding that the government has earmarked, namely like this strategic tech fund that we are going to see to be deployed very soon. So in terms of managing the strategic tech fund, I think there are still details to be announced. But would you have any suggestions for the government on how this should be deployed in terms of how this is going to be managed, and also the sectors that the government should directly invest in?
Okay, so for sure, I think it's a very good thing for the government to be allocating more resources, as I said. And if you look at Hong Kong, the ecosystem of Hong Kong, I think an earlier speaker mentioned, illustrated how much we have grown, right? Last year, it was a total of 40 billion Hong Kong dollars, right? About 5 billion US. That, if you look at that as a percentage of our GDP, it puts us as around 1.5, 1.6%, which is almost at par with the VC investment, right, in the U.S. As far as their GDP is concerned. But we had also looked at Israel, for example, which has always been drawn as a comparison to Hong Kong because of our population and all that. And I think Hong Kong is always striving to be more like Israel with as far as hard tech and research is concerned, right? Commercialization of university research. If you look at Israel, their VC investment is up at 2.6% or thereabout, right, of the GDP. So it means there's a long way for Hong Kong to go, and it requires patient capital, as I said. And I hope, government could be part of that. 30 billion could be patient capital allocated to drive a more commercialization of research.
Very quickly, actually, two really hopes. A, don't go alone, and B, be bullish. So don't go alone means, being a venture capitalist is a full-time job, and again, it requires know-how, it requires access, it requires a lot of things that Gordon talked about, and actually, I think that is associate yourself with people that are in the space for sure. The second thing is be bullish. Is if 80% of a P&L of a startup are salaries, you cannot go wrong in investing into startups as a government.
Sandy?
And actually, just to add, and to actually repeat what Karena said earlier, is the speed, right? Yes, the government could be investing into certain industries that we want, but hopefully, the way the money is being granted and being directed toward the startups, it can be done in a really fast and easy way for startups to receive the funding.
I think we have reached the end of this panel. Time is up. And I enjoy our conversation. Hopefully, we can continue our conversation later on. And once again, thanks for joining this panel.
Thank you, Cindy.
Thank you very much, everyone.